Just weeks ago, Beyond Meat's stock exploded and then collapsed just as fast. But behind all that chaos, there's a far more important question. Has this company quietly been fixing its business while everyone's been betting against it? Today, we're digging into the numbers, management's plan, and what needs to happen before the big money, the institutional investors, come back in. Because without them, there's no real rally. After 2 years of declining sales, Beyond Meat finally showed signs of progress in 2024. 2 straight quarters of year-over-year revenue growth and its first positive gross margin in years. The company also made deep cuts, exiting China, discontinuing its jerky line, and reducing staff. The 10K shows operating losses narrowing and the lowest cost of goods sold per pound in over 3 years. Still, revenues were down nearly 20% year-over-year, and gross margin hovered near 11%. So while costs are improving, demand remains weak, and profitability is still a long way off. Management's 2025 plan is all about rebuilding financial strength from the ground up. 1. Stabilize sales, aiming for comparable revenue rather than chasing growth until demand returns. 2. Lift gross margins to approximately 20% in 2025 and 30% long-term through process efficiency and selective capital investment. 3. Cut operating expenses under a 2-year program to reach run rate EBITDA positive by the end of 2026. 4. Reinforce liquidity. Beyond Meat has no secured debt and plans to optimize its capital structure for flexibility. At the same time, they're refreshing the portfolio. The new Beyond 4 burger, Sun Sausage, and an expanded Beyond Steak line, all using simpler ingredients and avocado oil. For serious investors to re-enter, the fundamentals must prove that the business is truly stabilizing. Here's what to watch. Sustained gross margin gains. Consistent progress toward 20% or more. Revenue stabilization driven by repeat customers, not promotions. A credible path to cash flow break-even before 2026, ideally without additional dilution. Real improvement in brand perception. Management blames misinformation from incumbents, but consumer trust will return only if taste, nutrition, and price line up. If those metrics turn upward, conditions could finally be strong enough to re-attract institutional investors. A necessary foundation for any sustained rally in the stock. Beyond Meat has tightened operations and refreshed its products, but it's still in repair mode, not growth mode. The next real rally won't come from excitement. It'll come from execution, consistent margins, and renewed confidence from long-term investors. If those improvements take hold, the next step will be watching for signs of institutional accumulation, expanding 13F ownership trends, and renewed fund participation, to confirm that the stock is finally starting to position itself for a sustained rebound.